Right, it's Sunday, 29th of July. This is the dollar index chart. So, as you know, I do have a longer term negative outlook for the US dollar, and this index is a good demonstration of why I feel so negative. You know this already, I've told you so many times, but this is the weekly chart, the dollar index. So we've got long upper wicks on these candles showing that every time we test these longer term moving averages, the 200, the red line, and the 100 week moving averages, the sellers come in and bash the price back down again. Now, the week before last, I saw this particular, what is that, shooting star? I forget all the names of these things, but I know what they mean. So again, another big test of that resistance area. Sellers come in, bash the price. Now, I honestly thought that this would be a big red candle last week, but it wasn't. We've just hovered, pretty much just traded sideways, which is a little bit frustrating. I do think eventually we will break lower, but as always, you never know with the timing. So we were getting short up here on the 19th of July. Everything was looking good. Market headed lower into, what was that now? That was Wednesday. Wednesday, everything was looking good. We had this very minor trend line, you can see, it goes back about 5-6 weeks. I didn't think that that would be particularly significant because there's nothing on any other time frame that tells me that we would have bounced off here. The stochastics were still looking quite negative. We were maybe a little bit oversold in the short term, but there was no reason for me, especially as we've broken this 55-day moving average. You see how the 55-day moving average has done a pretty good job of being a support level in the first 3 weeks of July. So once it was broken, I figured, right, we're going to go. And it was broken on Thursday. Anyway, as it happened, I was caught out and we got this big blue candle, and Thursday we rocketed up completely the opposite of what I thought would happen. Now, I did say I didn't think this was the start of a bull trend. Okay, this is a bullish engulfing candle, and normally you'd say, oh, all right, there we go, the buyers are in, we're going to rocket back up to the recent highs and test them and maybe even break higher. I didn't see that. And fortunately, that was at least right. We did trade a little bit higher on Friday, but this in itself is a negative candle. The new high for the week, and then the lower close from Thursday's close. So all this does, unfortunately, is tell me that we're in a sideways trend. So this price action from the last 2 days is telling me that we're going to trade sideways. Now, I love a swing trade because I'm lazy. I like to get into a trade, leave it, run it, and obviously this was doing really well when we shorted the dollar, and I was just letting it run for days and days and days, and there was some good money in it. I'm not a scalper, so I don't like sideways trends. You've got to be a lot more active. You've got to be a lot more alert. So what I do have to do is I have to quickly identify when we're in a sideways trend and when there is no longer a swing trade opportunity. Now, when you look back, you can see that we are in a sideways trend. You know, it's not something that I've miraculously spotted. Over the last 2 months, we have in fact been in a sideways trend. So, and this just reinforces the message. I thought we'd break lower. We haven't broken lower. So, unfortunately, the range will now, for the dollar index, be 94.20 up to 95.55, 60. And we'll just have to trade that range and wait for the break. I think we'll break to the downside. I think eventually we'll break 94.20. We'll break 93. What's this? 23.6% fib. 93.80. We'll break the July low at 93.70, and we'll head towards the June lows down here at 93.20, and eventually the 38.2% fib, which is going to be good support down at 92.75. But I've no idea when that happens, and there's no point in being short, hoping for it to happen. We have to wait for the break. So if we do get up to 95.50, 95.60, that should be a good selling opportunity, but a close above here would be extremely bullish. So we would have to be ready to be buying into longs. I think the first stop would be this trend line up here around the 96.30, 96.40 area. And you can see how that's reinforced. I'll just remind you of the weekly chart. All this important moving average resistance up here around 95.30, 95.50, and then we get through 96.00, and that's a big buy signal on the weekly chart as well. The Euro-US dollar weekly chart also shows that we are very clearly in a sideways trend. Now, this is kind of interesting because this is more of a consolidation pattern, a triangle, a pennant, where I would normally expect it to break lower. And I'm not saying it won't break lower, but I've got that very bearish looking dollar index chart in my head. Okay, if we were to break lower, then we've obviously got this 200 and 100 week moving average support going on down here. Now, the daily chart shows us this triangle, this pennant, whatever you want to call it. And you can see that we're just trading very, very carefully within these two parameters. So we've got the sort of 117.30-40 area as resistance. We've got support down here around 116.00. We didn't quite make it on Friday. All you can do is trade those two parameters. Trading anywhere in the middle really is just trading in no man's land, and there's no risk reward to the trade. So it really is a waiting game, unfortunately. If we were to break through 115.90, then I'm pretty sure we'll head quite quickly towards 115.00 and maybe even 114.50, which is where you've got the 500-day moving average and the 50% fib, and you've also got those weekly moving averages down there. That would surprise me purely because the dollar index chart looks so negative. If we can, you've got now strong resistance at 117.35.55. If you were selling up, you know I had that as strong resistance. You know why. It's a 23% fib, 0.6% fib, and you've got this trend line here. If you were selling up there, if you were trading short term, and if you were selling up there last week, that was lovely. Each time we hit that, we turned around and reversed. So well done if you did that. I actually didn't. I was so convinced that we were going to break higher. I was just sitting and waiting for the break above here, but it never came, and I missed those nice little shorting opportunities with as much as 100 pips in each trade. So let's just watch that 117.50. If we start breaking above there, and in particular, then we'll head for 117.90, but I don't see that as resistance. It is the July high, but I don't see that as resistance. Once we get through there, then there's no reason why we don't rocket straight up to 118.50 and 119.00, 119.20, which will be strong resistance. So again, unfortunately, it's a sitting and waiting game. The Australian dollar versus the US dollar. This is the weekly chart. Now, this is charted really nicely. We were getting short up here for obvious reasons. Intersecting trend lines, 100-week moving average. That was nice. And then the market collapsed. We found support at this 61.8% fib at 73.25. And that was the only support in this area. There was nothing else. There was no moving averages. There was no trend lines. There was no short-term support on the 4-hour chart or anything like that. We weren't particularly oversold either. So I'm kind of surprised that did hold. But look at those long candle wicks. You can see buyers came in aggressively every week that we came down here. So someone wants to buy this at the 61.8% fib. Now, we've just ranged between that fib and the 50% fib. I love fibs. They work. I don't know why they work, but they do work. So this is clearly the range. 73.25, I think, is that right? 31.8. Yeah, 73.25 up to 74.80 is clearly the range on the weekly chart for now. And there's another good reason for that range. When you look at the daily chart, you can see 73.00 has held on the retest in July. We've got the first 23.6% fib here just below 7,500, and this is just one big sideways chop. We're literally up for a day or two, down for a day or two. So it's ranging. The 55-day moving average is definitely having an impact. 74.67. You can stick that one on your chart and see if we hold that again. You may want to try a little short position there just to see if you can scalp it for 50 pips or so. Clearly we've got resistance down here at the 93.25, 93.10 area. Support at the 93. And then we've got this trend line that goes back to middle of February, and that's now just meeting this 23.6% fib and the short-term 38.2% fib as well. So that 7,500 area is going to be probably the most important level of the week. If we get up there, it is worth a short just to see if we stay in the sideways trend, but then we'll want to reverse very quickly if we get above there, and then we'll target the 100-day moving average, and we'll probably end up around here, 76.25, 35, where there's a lot of resistance. So trade the sideways trend and wait for the breakout in the Aussie dollar as well. New Zealand dollar versus the US dollar is not immensely different to the Aussie dollar chart. Let me try and straighten that up. So again, we broke through this trend line, and we have also held the 61.8% fib down here. This candle fooled me. I thought we'd broken it, but we recovered quickly. And you can see there's a decent trend line going back to March of last year, which reinforces that 61.8% support level around 67.40, 67.30. We've spiked below on the last 4 weeks, or 3 of the last 4 weeks. Last week we actually held significantly above there. So that support is obviously working. This is another reason why I think the dollar will weaken. This New Zealand dollar looks like it can strengthen against the US dollar. But for the time being, it is another dollar pair that is unfortunately just trading sideways. Here's the range. Strong resistance at 68.50. We've got this longer term trend line down here at 67.30, which does seem to be holding more recently. What can I tell you with this? Well, again, just trade the range, 67.30, 67.20, resistance at 68.50, 68.60. We're going to have to get above the 55-day moving average, which is around 68.75, to confirm a positive breakout in a weaker US dollar. Until then, if you're a scalper, this is great. If you like to be active, if you like to sit in the market, put lots of trades on, get in, get out, well, then you're just waiting for these boundaries to be hit. You know, sell into a short 68.50 area, and if you can nick a nice 50 pips on a move back down to 6800, you're happy. So again, watch that. If you're not a scalper and you're a swing trader like me, it's going to be very boring. So I guess if you want to try and make some money, you better learn how to scalp.